All right,
Yo.
how's it going?
Hey guys, good to see you guys. I'm loving the three hats. Each of us have our own respective hats on.
Yeah, for sure.
Alta. Is that SpaceX, Kevin?
It is. From my sister.
That's SpaceX.
Oh, nice. What's yours, Brian?
I'm rocking a Velociraptor today.
Oh, that's awesome.
Nice, that's sick.
Hat.
I think that's my favorite one, honestly. So a lot of stuff has been floating around since last time, hasn't it? The
Definitely.
kind of capitulation is really in full effect right now. And to be honest, I don't even think we're at the bottom. I think there's still a lot of unwinding that's going to happen. As soon as some liquidations happen, as there's some deleveraging, we're going to see another pretty big candle drop. But yeah, one of the big things I think, Kevin, that you had on the agenda to kind of chat through today that I have no idea about, even though it's probably the headline of crypto Twitter this past week, has been all this controversy over Three Arrows Capital. And I just kind of pulled up an article about it. And the title of the article is "Founders of $10 billion Crypto Hedge Fund Have Ghosted After Bets Go Bad." You want to tell me what's going on here? I feel like I'm the only one out of the loop.
Yeah, this is such a fascinating topic, especially because for the past year or so, a lot of us in the crypto world have revered and respected 3AC, they're god tier traders, right? I actually read their history. Not sure how much of this is substantiated, but they started off, these two guys, with 1 million, and then they literally increased that over and over 1,000x to a billion
insane.
plus. And so they were mainly a prop trading hedge fund type firm.
Gotcha,
I know those are a little bit different. There's a lot of debate about what they actually are. There's also rumors that the peak number of AUM, assets under management, is 18 billion. Now they
God.
say that the true value is less than that, but that's if you
I wonder
do
if that's
some
notional.
accounting type stuff. But they weren't only trading, right? They were at the top tier on BitMEX, Bitfinex leaderboards and stuff. But they also did a little bit of VC work. You saw some rounds being participated by them. They did some market making. They made money in various ways besides just pure trading by the time they got so big. But the big news or the rumor was that they got margin called, not even to zero. They are $1 billion plus in debt, is what the rumor was. And at first that was just people on Twitter. You're okay, whatever. We don't even know if they're telling the truth. But then they went silent, right? Suzu and Kyle Davies went silent, the two founders. And they're oh, we're communicating with counterparties. More news came out that it actually was really serious.
Okay, wait. So can you break this down for me? Because there's two things that I'm kind of interested in here. One is, who are these guys? who the hell is Suzu, and who the hell are Suzu and Kyle Davis? Are those the two guys? Yeah.
Davies.
Davies. And then the second is, all right, you're $1 billion in the red. How does that happen? Did they have some stock portfolio that they were? I just don't even know how that happens, right? Because everything in crypto pretty much is over collateralized when you're borrowing. But how do you get that far in the red?
Yeah, that's a great question. And so there's a few different thoughts about that, right? One is that Suzu pushed the super cycle thesis. If you've heard of that, he's crypto's going to go up only, super cycle.
Yeah.
So that he actually believed it, right?
That was the first red flag.
Yeah. So people said that they actually believed it, and so they just went long the whole way down. And that's that. But I actually don't think that was the whole story, to be honest. Someone else said that they had 3 big trades go wrong on them. One was the GBTC, BTC arbitrage that they were doing. The second was the UST from Luna. They bought hundreds of millions worth of UST. Right. Tried to do that went wrong. And then staked ETH/ETH ARB, that also went wrong on them. And they did those in size, right? So rumor was that they were on tilt after they F'd those up those supposedly low risk trade type of things, and so they're trying to make it back and used a lot of leverage and got wrecked. That's what I heard.
Yeah, and keep in mind, a lot of it was all through centralized entities too. So even though everything that happens on chain is over collateralized, they were doing everything, imagining under collateralized, or at very least, they were, seems like, kind of reusing collateral, like going to places, getting loans from other places, and using the proceeds from those loans to post as collateral on other exchanges whenever they were getting margin called on. So they were basically
Oh, sorry, I didn't mean to interrupt you. Yeah,
No,
I can also see a world in which these guys are like pretty convincing, and they are able to raise like a bunch of debt from people with no collateral, right? And just say like, here's our thesis, here's our fund, look at our performance, and kind of at the top of this bull cycle, right? Like people were so, I guess, like emotional. In awe, right? And like they saw like all these kids, these 20-year-olds making millions, billions of dollars, like SBF, right? That they're just sure like anything. I just want to be part of this kind of gold rush, right? And I can totally see something like that happening.
So.
And they had such a good reputation too, right? I think that was
exactly.
So they had
so that was my next question, though. Is like, what's their background? So like this. Zhu Su and Kyle Davies, like, who are these guys?
Do you know their backstory, Brian? I don't know it that.
I don't know. I don't know their backstory that much. I haven't dug into it. I think they used to work for some like prop shops, like more traditional finance.
I'm pulling them up on LinkedIn. Okay.
You hear a lot of things over the last couple of days. You're not 100% sure what's true, what isn't.
Oh wow, they have kind of limited information on their LinkedIns at this point.
Probably scrubbing it now.
They're probably scrubbing it, but yeah, it looks like they were like. It looks like they were traders, or one of them was a trader. They have like pedigree, sort of like this guy. Zhu Su, he went to Columbia, summa cum laude. He went to Phillips Andover. He worked at Deutsche Bank, Flow Traders, not sure what that is.
Flow Trading, that's the one I remember.
Yeah, but it seems like, these are probably like pedigree, sort of like Ivy League guys. Maybe like really well connected or come from some money or something.
Yeah. So I don't know about their backstory, except I believe that they started off just like trading their own money or like a small fund. And they were just really good at trading.
Any outside money. I'm not sure they took any outside money as far as I know.
I see. So like at first it was just their own cash.
They're just talented at trading. It's just because they started like getting this much size that it made it much harder for them to do the same things they were before, right? They had to do different types of ARBs and things like that.
But my guess, I'm curious like how talented they actually were at trading, as much as they
or how much timing
really. Oh yeah, I think they really figured out the metagame really early, right? Like in 2020, whatever, they were super aggressively, farming and investing a lot of these smaller projects that would go to 100x, 200x, whatever. So I'm not sure.
If I'm not mistaken, they
trading
started
track record
way early though. Like they started their 3AC in like 2013 or 2014.
I think they've been around for a while, but my gut is like they didn't blow it up to many billions because of their trading abilities. Maybe they did. I'm speculating here myself. I don't not as familiar with their history, but I think so much of where they've, or on paper had made a bunch of money in the last couple of years was all of these investments. You go to their investments page like AVAX, Solana, like Aave, all these things that have just like blown up this cycle.
Back to what you guys said earlier, I did read that they were going around asking for a ton of unsecured credit, like from wherever they can get it. That. And that 3AC borrowed from like every single big lender out there, whether it's like BlockFi, Nexo, Celsius, etc. And so this was already like semi-confirmed by some of them. Like BlockFi said they had a big client that they had to liquidate their collateral because they couldn't meet their obligations. And so people were saying that this is some sort of contagion, like 3AC getting margin called is going to seep into like every single big lender out there, essentially.
And it looks like they were propping up, just for like posterity here. Like it looks like they were propping up like UST, right? So they were kind of working with Do Kwon, and they were pumping a ton of capital to keep, you know, UST like afloat, so to speak, right? Or they were just a major backer of that project. And so when that unwound, that was kind of like the beginning of the end for them.
Yeah, exactly.
Yeah, I think
so.
They definitely were very heavily invested in and had created like some products. Like I know one of the things that they were doing, and this actually really pisses me off, is they were, you know, investing in token projects and offering to take the money that they invested in these token projects, be like, hey, let us manage it for you. And
nice.
Imagine, and they were basically like, okay, we'll give you like 8%, you know, return, which is another red flag. If anybody's guaranteeing you 8% return on a treasury, yeah, the guarantee is probably not good in a downturn. But yeah,
I think
they were going around, and I think one of the things they did was throw it in UST or in Anchor. And so now I'm sure once that collapsed, they're like, oh man, we're on the hook for so much money to all these token projects we invested in.
Exactly.
I don't know how big of their portfolio that was, but yeah.
That's so crazy that they approached their startup founders with that. Like the more conservative ones said no, but you can imagine some people are like, sure, why not? Like generate some yield, get me some extra capital on my startup funds. That's
and like, this is 3AC. Like I'll trust them. You know, they seem to know what they're doing. They made a bunch of money, but now, I mean, now those founders are kind of in a really shitty situation. I don't know how much of their treasury they gave off, but some of them may be in really dire straits right now, which is, you got to feel for them, and certainly pisses me off about 3AC. So
one of go for it, Kevin.
Go ahead. I was gonna say, so like moving on to after their margin called, right? They have to try to salvage some of their positions in whatever way possible. So this guy called Danny from 8 Blocks Capital wrote an early thread about what was going on, because they had a agreement with 3AC to use one of 3AC's trading accounts. And so why would they do that, first of all? Like, you're using someone else's accounts. That's kind of like random, a little bit shady, probably not allowed by the exchanges. But 3AC gets the lowest fees because of like their size. Their size is size, essentially. So his 8 Blocks Capital wanted to do delta neutral market making with hundreds of millions in volume. So they need like the lowest fees possible, because every like tiny percent of a percent is going to be too much fees for them to do their strategy. So they've done that with no problem with 3AC for like 1.5 years, I believe. But then all of a sudden they couldn't really withdraw properly. They noticed some funds missing, $1 million, and they stopped answering them. Like the 3AC team didn't answer them. They're like, hey, what'd you do with our $1 million? Like, give it back. And so apparently 3AC was trying to like scrounge up whatever capital from things that even wasn't theirs, but they could get their hands on to answer their margin calls. And so they took other people's funds too.
Oh, wow. I think earlier like, one of the big, I think, red flags of this bull cycle was seeing how many startups and funds propped up that were just arbitraging interest rates. That's kind of a red flag, right? And I myself overlooked it. Like I'm not going to claim that I was any better, but if you've seen products like Stable Yield, right? Like Stable Yield, Celsius, BlockFi, all of these were arbitraging some like interest rates that effectively weren't sustainable, and so then everything kind of like fell down very quickly with just like a little push, right? And that's a huge red flag, and that's something like for myself that I need to kind of keep in mind when I watch other cycles and bubbles kind of like prop up. But I think that was one of the craziest things here, right? And then, as you said, firms like 3AC would fund these ventures that were just arbitraging capital. And so then the ventures that they were funding were basically just being pushed to do like customer acquisition, right? So they were basically just trying to find more retail investors to kind of like bring into the mix here and pump capital into the system, which is honestly like pretty crazy, right?
Yeah, exactly. A pretty recent rumor I heard of is that 3AC is now doing asset sales and potentially getting like rescued by some bigger firm. Rumors are maybe FTX or maybe Binance. I'm not sure, but I could see that happening. And the thing that Brian said earlier was that like someone put a list of all of their holdings, right? They invested in a lot of big layer ones like Avalanche, Solana, Mina, Terra, and then a lot of DeFi projects like Solana DeFi projects, Orca, Synapse, Woo Network, Trader Joe, Avalanche. I mean, Suzu was big on Avalanche ecosystem too. Mm-hmm. So it's like people were worried. They're like, how much of these smaller startups or protocols do they hold? Because that could be like big liquidation pressure if those get dumped.
It's not only that; it's also the unlocks they have in the future too, right? Like they,
right.
Even if they, maintain those unlocks, I mean, they'll be having to sell them to, meet their obligations. Even if they end up selling them off to somebody else is probably going to be selling them off to meet some of their obligations too, or at least like realize some amount on the investment.
Right, exactly.
Yeah, it's for a lot of those projects, it feels like there's a good chance there's going to be some like cap
crushed
basically on their valuation, right? Like they can only any real pump is just going to get sold into as people try to realize some of their profits on it. And I mean, this isn't necessarily specific to 3 Arrows Capital investments, I suppose. I think that's probably going to be a trend for the next couple of years anyway. But yeah, it's not very pretty especially if they were a big investor in you. And I think actually some of these things they were being put up as collateral too, or some of their like project equity. It wasn't, it was maybe, I don't know if it was like some of these token projects, or I think there are rumors they posted their Deribit equity to Deribit themselves or something like that. And then I think they also have a pretty big investment in Starkware. They may have been posting the equity they have in Starkware. Which also just shocking that people were taking completely, like, first, another
so
thing
irresponsible.
Too. So irresponsible. Like, okay, 3AC, yeah, they terribly managed their book. These exchanges and wherever else they're accepting completely illiquid collateral for like these loans, it's insane. Like, you're taking illiquid startup capital. Like, and I'm a big bull of Starkware. I think Starkware is very interesting technology, but like, I'm not taking that. Are you kidding me? To secure your loans, like, what's your plan when things go south here? Like, you're going to be completely under. Like, it's completely irresponsible by them.
This is the most degen stuff like we've seen in a long time.
And so, why would somebody bail them out? That's what I'm wondering. Is like, why would FTX bail these guys out? What do they have to gain?
That's a good question. I'm not sure.
Have to be structured in some meaningful way, right? I mean,
yeah, because those guys are sharks.
FTX isn't into altruism, right? Yeah, I mean, they're going to be trying to like pick up the carcass more or less. Yeah, I mean, if they have like $1 billion debt, I don't know. I think you take it over and you try to negotiate the debt loads down, and then then you're just like holding the bags that they have, or. I'm not very familiar with how a lot of these deals would be structured, but I imagine a big part of it would be trying to like acquire and negotiate the size of the debt down with creditors, and then trying to realize on that, because they're going to be getting whatever their book is. Like, they probably have some notional amount. Some of their assets are probably going to be getting it,
and they probably have some equity, right? Like they might be trying to scrape some of the equity in some of these like crypto startups, right? If they need to make like a strategic investment, and like 3AC does own like some portfolio of like DEXs, for example, and then FTX can aggregate those DEXs and then take the fees from those dexes and like kind of roll them into their portfolio. Maybe, I don't know, like something maybe along those lines. But yeah, I think restructuring debt is definitely going to be part of, or renegotiating debt is definitely going to be part of like any sort of bailout. It seems like that kind of makes sense.
So this was obviously probably the craziest like news this past week, but something else a little bit less crazy was all the crypto company layoffs that happened. That was a lot of people like used it to criticize the crypto space, but also this wasn't like by itself, right? I mean, a lot of other tech companies and Silicon Valley companies were also doing these layoffs alongside them. So what are y'all general thoughts about all the like BlockFi, Coinbase, all those layoffs in this space?
Yeah. Well, obviously some of it is very reactionary, right? Like, like BlockFi is obviously going to be very reactionary, but I think some of the layoffs, like Coinbase, for example, are a lot more about like macro conditions, right? And I mean, this is generally true for the crypto market in general. Like, I don't think Coinbase is necessarily like in hot water over too much of like the DeFi stuff. Like, I don't think they have nearly as much exposure as some of these other companies, right? Like 3AC is like a totally different story than Coinbase,
right?
But they are affected by like retail austerity, right? In terms of like spending money on like growth investments, which is generally like how you would categorize something like buying Bitcoin or buying Ethereum, which, as I understand, is how Coinbase makes most of their money still, is off of like consumers just buying through their centralized exchange. And so, with interest rates going up and markets going down and inflation kind of like hitting us pretty hard, I think a lot of that is mostly just like macro conditions affecting like those sort of layoffs at bigger companies. That's what I see. So it's like not, I think you're right. Basically what I'm saying is that like I don't think this is as much to do with like I don't know, anything particularly like DeFi related, more as just like, growth is going to slow down quite a bit, right? And it's going to continue to slow for a while. And so this is the right move. Honestly, this is the right move for Coinbase, for example.
I do agree,
I think
but
BlockFi is definitely affected, though. Yeah. BlockFi is generating their yields. They're generating their yields from DeFi.
Completely.
Yeah, I don't know. It feels like they... I mean... They're letting go of a lot of people, and a lot of them that they hired within like the last year.
Right.
So I think there's definitely some level of probably like mismanagement going on there. If they're like,
right.
Okay, we got to grow like a ton. I think you can look at places like FTX and Binance that similar size. Those are like their direct competitors that are actually still hiring.
Right.
Coinbase, I don't know, they seem a little directionless in general. They kind of have their consumer business, and then they've just been trying like a million different things over, the last couple of years. It was trying to find some sort of fit, whether it's like their NFTs or, kind of the Coinbase wallet. I mean, Coinbase wallet has decent usage. They've tried a lot of like random things. They haven't really done anything seriously in DeFi. So I don't think they really have much of an idea what they're doing.
I have a good nugget about this. Like somebody kind of once told me that companies become big because some founder went and tried to find some vein of gold, and then you find the vein of gold and you mine it out, right? Like you do everything that you can to mine that vein of gold once you hit it. And like Coinbase, for example, heading to an IPO, I'm sure that they started like hiring very aggressively, right, to like mine the fuck out of basically getting consumers into crypto, buying crypto, and then making fees off of that. But then one of the issues that these companies find when they get bigger is they start needing to spend their resources on finding new veins of gold, right? And so I think you've basically hit the nail on the head with your statement of like, they're kind of flailing and looking for, what's going to be our next big moneymaker. Like for Facebook, they found Instagram, right? And they found that through an acquisition. They didn't actually find it through R&D. But then they mined out Instagram quite a bit, and now they're trying to like kind of get into that TikTok space. So like I think you're completely right there. Like that seems to be kind of what's happening at Coinbase.
Yeah. Unfortunately, now is not the time for exploration for them.
Speaking of
Yeah.
Speaking of the Binance and FTX being more lean, I thought it was hilarious how CZ was like in the past year, we had the opportunity to, we as in Binance, had the opportunity to do like stadium naming deals, do like Super Bowl ads and all that stuff, but they said no to that, and instead now they're hiring. I was like, that's so funny. Now they're hiring
really
2,000 open positions.
Did you guys see that
But
picture of CZ, the photoshopped picture? That was hilarious.
Yeah. I do think the whole like layoffs thing, especially on the Coinbase side, was mismanaged though, because at first they're like, oh, we don't care about the bear market recession and stuff. We're gonna accelerate through and grow through, and then just a few weeks later they complete 180'd and was like, never mind, like worsening macro conditions. So it's just, yeah, it just looks like, I agree with y'all, they don't really know what they're doing properly.
Yeah, it's interesting. I think if you want to talk about like the crypto space more generally, though, like I think a lot of some of the smaller or like some kind of DeFi companies and stuff like that, they aren't feeling the hit as much from this right now. At least from my viewpoint, I think there's still like, at least I can speak to my company. We're still like opportunistically hiring where it makes sense. Like, I think a lot of like the smaller projects, the projects that are doing the more like DeFi native stuff, things like that. A lot of them secured around relatively recently, so they have like plenty of runway. And then B, maybe they have like some proceeds from tokens that they've launched or whatever. So I think a lot of those have tended to be in like are in a pretty good place. Notwithstanding the ones that get rugged by 3AC or some of these like DAO projects or whatever that are just holding their governance token that's probably going to be down only for the next 2 years, a year, whatever, however long this whole thing lasts. But I will say, I think a lot of the majority of kind of the smaller to even like mid-sized crypto companies are still like pretty well capitalized and not looking to actively lay off in any way. And are in fact looking to hire still. So,
and I've also noticed that venture is actually still very, very interested in early stage crypto startups. They're obviously trying to be a little bit more sharky, but I mean, I've been talking to some people at blue chip venture firms, and they still have really deep pockets, and they still have a lot of conviction that crypto is going to be huge, and they kind of want to take this opportunity to. They're obviously being a lot more careful with their money right now, but they're still very interested in meeting strong crypto founders and trying to invest and to be honest, get better terms on deals these days. And so there is a lot of capital that's still sidelined, that's kind of waiting to be deployed into this kind of like early ecosystem. And so I think what we're likely going to see with these layoffs is, one, like there are a lot of people that I think probably existed at Coinbase that already wanted to maybe do their own thing, or have been like monitoring what's happening in DeFi and have some ideas. And then there's all this sidelined money. So I actually do think we're going to see a lot of smaller, firms start popping up that are going to kind of like invest heavily in building something in the space. So I think maybe these layoffs will actually fuel that.
I can definitely see that happening. Because I think this time around, like, we have so much more proof of what the crypto space can do and be, that VCs, it doesn't require as much imagination for them, right? I remember talking to VCs in 2019, early 2020, and they did not have any imagination. I mean, obviously some did, right? The multi-coin, whatever. But a lot of them were just like, we're still in the accumulation phase of this bear market. It's like, we don't know how big the TAM's going to be, et cetera, et cetera. But now it requires less effort to convince them that the opportunity is going to be as big as they need it to be, essentially.
It does. And I think we're also going to see the nature of who's playing in VC and how they play change because one, I think what we saw this last cycle were a lot of, I think, new VCs. Like I have nothing to substantiate that, but kind of like this new money flowing into the ecosystem, and a lot of the mentality was release a token, dump the token, and we're gonna, like, we as the VCs are gonna take an easy 10 or 100% multiplier on our investment, and we're gonna exit. We're done, and we want this to happen in 6 months to a year. And I think that mentality is going to dry up, right? Like, one, a lot of the people with that mentality are not long-term players, right? So they're not going to be like the Sequoias or the A16Zs or the BCVs of the world. They're like, these like people who happens across a ton of money, right? And so now we're probably going to get more of a concentration of money towards, like real value, right? And so that's my personal kind of like take on this.
That's what Mike Duda said too. He said that during this bear market, we're going to shift to founders preferring VCs who actually will believe, use their protocol, and build alongside them. Maybe not build, but like support their protocol as it grows.
It's not just pumping bags. It's not just pumping bags, right?
It's not like the Solana ecosystem where it's like FDV insane, like 1% float, all that BS that now retail we know better. And we got burned on a lot of those, and we're like, we're never touching stuff like that again. So you're right, like they can't do the same tokenomics tricks on us.
Right.
It's going to have to be different.
And it seems like every cycle there's some tokenomics trick, right? Like the previous cycle was ICO launches. Everyone and their mom was launching a token. This cycle it was Ponzi farms, right? Like everyone got into like yield farming. And liquidity providing is a real thing. But what yield farming became were just like people supporting these like weird liquidity markets, paying out in shitcoin tokens, and it was just kind of like an abstraction of we're trying to steal your money in just like a different, slightly more complex way, right?
I mean, I think if you want to look for one of the signs of when the next bull market starts, it's going to be what's the new financing, basically. I think ICOs was kind of the last bull market. This one was yield farming. I think if you want to take an optimistic look at it, it's okay. We're getting at least somewhat closer to
value,
some sort of like tangible value, right? Like ICOs is like, here, give us $1 million, and like maybe we'll build it. You have stuff like what was I was looking at the other? You guys remember Golem?
Yes, I remember Golem.
Yeah, they're sitting on hundreds and hundreds of millions of dollars worth of ETH, even at current prices. And they have like 40 active users or something like that. Like their treasury is like 9 figures and nobody uses it. And they're just I imagine they're just kind of kicking it. And,
exactly.
Have bank they can access, right? So at least we're something. Now you had yield farming, and it definitely was still extractive, but you can argue. I mean, it's basically the same playbook that like Uber was running back in the day when they were like heavily subsidizing, rides to show growth and whatnot. That's essentially what's happening here. This
User
is a little
acquisition,
bit,
right?
Yeah. But I mean, I think it's a big difference when the capital. The whole idea of a blockchain is like capital can freely flow very easily. Well, that means capital is going to freely flow out of your system as soon as it's not advantageous. So. But yeah, it'll be interesting. That's one of the big check marks I have for the next bull cycle is what's this new funding mechanism. I'm like optimistically think it's probably going to get us closer to some sort of terminal or some sort of like alignment of value and I guess some sort of alignment of value. But some of that is also going to be very dependent on regulatory and things like that. But yeah,
and one of the
go ahead.
Thank you. One of the big things that I'm monitoring for this next cycle, where like this is sort of something that I'm looking for to see like when are these cycles going to start getting like more compressed and like kind of reduce the volatility that exists in the crypto world, is when transactability, like real transactability, kind of becomes more prominent in crypto. I'm pretty bullish on it happening this next like in these next couple of years with, I know Square is investing heavily in it. I know like even Twitter now is looking at enabling crypto payments. But once payments happen on chain, money is going to start staying on chain, right? And once money starts staying on chain, there's going to be less volatility because people are going to be exiting, like fully exiting at a much lower rate, right? So that's just kind of like one of the things that I'm really looking for to see, like, you know, this is either going to be a longer cycle or there's going to be less volatility moving forward. So sorry, Kevin, what were you gonna say?
I was gonna say that one thing I'm looking forward to in this bear market is some high quality projects launching in the depths of the bear market at a fair valuation that we haven't seen in a long time. Like, I remember bear or bull markets, like some projects on my radar, they would launch and they're fully diluted already in 10 billion plus. I'm like, come on, like how much more? Like, if it goes up, it's because of pure speculation and euphoria. Mm-hmm. But like, how much more value is left there? But if we see projects, high quality ones, new ones too, that launch like at tens of millions or maybe even hundreds of millions, that could be like an amazing scoop, an amazing entry point that honestly would not be possible at any time in the bull market.
Well, we might start seeing some founders learn what EBITDA is, which would be a great sign.
Yeah, it's interesting. I think I looked at this a little while ago, and I need to do more research into it. But like, what percentage of these projects that, you know, who are really successful this cycle also were around last cycle, or like some form of, like, or at least I should say more specifically, the token was also around. Like what tokens, you know, made meaningful all-time highs. You know, what the biggest, the best example I can think of is Aave. Aave was one
definitely.
that, you know, it was, you know, what was it?
I calculated it.
It was
Aave went
Lend back in the day.
Aave went 600x from bottom to top of bear to bull.
Yeah. So I think there's probably some projects there to try to identify. Those ones are also going to be ones that don't have massive supply overhangs. I don't think Aave had like a crazy, I don't know what their fully diluted value is now, but I can't imagine they have a crazy supply overhang. I know that they definitely do some farming, but
I remember seeing
Aave
when it was ETHLend, and I was like, why would you want to do lending like that? And I unfortunately didn't research it or think about it too much. But I could see someone like researching it and like having the vision to be like, okay, this is going to make sense. This is like a need for DeFi. This is going to evolve to be huge, and place their bets properly like that.
Well, yeah, it's interesting because they were, I mean, obviously directly competitive with Compound. Where Aave kind of won, or I wouldn't say they've won, although Compound's kind of just been, I don't know what they're doing over there, but where they really got big was they were way more willing to list smaller, or like, you know, I don't want to say smaller tokens, but, you know, kind of smaller tokens, or tokens that Compound wasn't willing to list. I think the biggest example is Link. They're willing to list Chainlink, and now all the Link Marines have places to dump their Link, and, you know, take out loans and do some more speculation. So that was kind of how
it feels like
Aave
was fast,
but
it feels like they moved fast to basically adopt new things, right? Like when all those L1s were coming out, Aave was like rolling out, you know, versions of their platform for all those new L1s. Like they got Avalanche really quickly, for example, right? And I was like, that was impressive, and that was really important.
To be fair, I mean, Compound had generally the same type of idea that they had, except they wanted to execute it through a chain of their own, right? Now, ultimately, I think the ability to move fast via just deploying an instance on these different chains and then linking them later, which is kind of the strategy that Aave went with over, like, very, very hard to build your own blockchain. I think, like, I even think I saw Robert sometime this week, he mentioned, like, we're just deploying instances on different chains, you know, link them together. We'll revisit this Compound Cash idea potentially in the future. So they both kind of had like the same ideas. They're just different executions, and one of them ended up being much better. Especially in a bull market, you just got to move fast.
Yeah, and you see this with startups too. Like a lot of startups that try to build everything in house, lose a little bit of focus, right, and lose that velocity. Versus startups that focus on one thing and then they just integrate tons of really high quality vendors. It's sort of how I think of these other L1s, right? It's like you're pulling together all these other vendors to help you, ultimately with customer acquisition, right? And so that you don't have to build a bunch of your own technology, and just allows you to move so much faster.
Yeah. But anyway,
shall we move to
the obvious of this cycle? Sorry.
Yeah, exactly. I'm going to really take my time to think and try to find some thesis about what that could be.
Yeah.
But I'm curious to hear y'all's biggest bear market predictions now that we're undeniably in one. Well, we have been, arguably, but give us some hot takes and explain.
All right, Brian, do you want to go first, or do you want me to take this one?
No, you go for it. You go for it. You lead us off.
I have some thoughts on this that I feel like kind of strongly about, so I'm excited to share. I think like kind of the headline for me is I think we're going to see a lot of commoditization and consolidation of basic infrastructure. So what I mean by this is, like, for example, there are zillions of L1s right now floating around. There are a lot of like roll-ups and roll-up proposals. And during this last cycle, what we saw were all of these L1s came basically, and I think most of them were basically trying to compete on like price, right? They claimed all sorts of things. They're like competing on price, scalability, decentralization. Ultimately, what consumers cared about the most, what I noticed, and you guys please let me know if you have different opinions on this, was price, right? And for me, like, I think this is kind of the first thing that needs to shake out in a big way, and I think it will, is like who's kind of going to win. I'm not a multi-chain sort of guy. I think there's going to be one dominant chain, and I'm kind of leaning towards like ETH with rollups, right? Because I've skimmed through this, and you can push through a shit ton of transactions. Like I know I was just talking to like an anti-blockchain person recently who was very worried about like the environment and how much better Visa is, but like proof of stake ETH with data sharding, with rollups, definitely can process zillions of transactions. That's going to be a non-issue, and energy costs are going to be super low, gas costs are going to be super low. So I think like that's one example of a piece of technology that's going to get totally commoditized and consolidated. Others could be like, if we do live in like a multi-chain world, for example, things like bridges kind of will get commoditized and consolidated as well. But that's kind of like, that's my biggest take here. What do you guys think about that?
Do you think value will flow to the L2 tokens or the L1 token?
What do you mean by that?
I think,
like, if there's a lot of roll-ups and they have their own
and they have
tokens,
their own token,
right? Like Optimism, Arbitrum tokens versus ETH, the base layer token.
I'm not really like a token guy, to be honest with you. Like I don't know how much I believe that like tokens, like I do think that tokens will exist, but I don't know how much I believe we're going to have like this huge collection of tokens and money's going to flow out into those tokens. Like people certainly do want to speculate and want to like invest in some way. To be honest, though, I'm not actually like super convinced that tokens are going to be the way. And I like, maybe I'm wrong. That's just my feeling.
Yeah. So I guess I'll start kind of. I'll back up kind of where you began in terms of do I think like there's going to be a multi-chain world? I actually do. I do think ETH will be pretty dominant. But I think different chains will have different niches that they kind of fit in. Even without there being a multi-chain, like maybe there's not like 100 chains, and there's definitely a world that a lot of especially these EVM copycats kind of fizzle off a little bit more. But I do think even in a world where it's just ETH and a bunch of L2s. Bridging technology is still going to be very necessary.
That's true. Yeah.
Being able to have fast just communications between different L2s is going to be very important. I know it's something like my company was looking into quite a bit. It's like how do we mix a transact and then communicate across different L1s and L2s. So I think that will continue to be very important. I think you can think of it almost as like this kind of like TCP/IP protocol, just for communication between blockchains is going to be very, very important. But then as far as like, I do think we'll see a lot of kind of these roll-ups on ETH start having a good amount of success. I think as far as will value accrue to those tokens, I think they still have to, the L2 tokens, I think they still have to figure out what the value accrual mechanism is. Is it, you have a token and, block producers, what do they call them? Sequencers. The sequencers get to stake for the right to sequence, and essentially they're staking for the MEV of operating on that chain, or that L2. There's I think a world potentially where those sorts of tokenomics work. But the only thing I'd be like for sure on is like, yes, value will continue to accrue to ETH, and then all this other stuff. There's a little bit riskier.
Wait, so Brian, one question for you here is like, what do you think? Like, why do you think that we are going to see like kind of a multi-chain universe? Do you think it's going to be largely like due to marketing, or do you think it sounds like it's going to be due to need? Is like kind of what you insinuated, is that there's going to be some chains that are optimized for different things, and like right now I can think of like Avalanche, for example, sacrifices decentralization in favor of performance, right?
Yeah. I think that's exactly it, right? Like Bitcoin. A lot of these things live on a spectrum. It's kind of like Bitcoin. You go like Bitcoin's on one far end almost, and then Solana. It's basically
right. But you don't think that like roll-ups are gonna solve this kind of problem of like, because for me like performance, for example, is solved by roll-ups. Roll-ups and data sharding take care of performance concerns.
Yeah, I mean, there's still. It's still a tricky. I guess it depends. Like, I guess I'm looking at this from more of a integration perspective. As I'm thinking about it, like even just having all of these. Let's say you have as a DeFi project, you have instances on like all these different chains or roll-ups. That's much harder, and you're having to like share state across these different instances that you have potentially. If there's a chain that you can do, like Solana, if there's a chain that you can do that on where the state is kind of like automatically shared, that's definitely more attractive and frankly like safer code. But it comes with its own drawbacks, and also this is aside from all the innovations that I think will continue to happen in that space. Like, I definitely can see. I see both worlds, to be perfectly honest. But I do think, at least in the short term, short to medium term, we'll still see this kind of like multi-chain. Maybe it's not as many chains as we thought, but I still think there's some advantages to other chains. But we'll see how that plays out.
Awesome. So I want to kind of shift to one last topic to wrap up, and that is to ask both of you, how do you think, for your opinion and thoughts, predictions of how the rest of this bear market plays out, like in terms of length, what takes us into the next bull market? How do you think this, is it long, is it short? I mean, we've seen like, I was saying in the Slack that we've seen like months worth of price action kind of compressed into like a couple days. At least it feels like. But just in general, how do you two see the rest of this bear market shaking out?
Yeah.
I can start. I think it's
I
entirely dependent on the Fed.
Yeah, that's exactly what I was going to say.
Yeah, I mean, I think it's a mix of things. Like a necessary condition for the next bull run is basically Fed easing. But then I think on top of that, it's like, okay, well then what are the things that are really going to spur people's interest back into crypto? I think one of the things I mentioned earlier was, what's the new form of Ponzi financing? Hopefully it's a little less Ponzi than our previous two forms, but what is that going to be? Like, people love the PvP game in crypto, right? So I would speculate.
Nah.
Is that gonna
Not gonna
help?
affect
Like, why
anything.
do you? Yeah, I don't think it. I don't
The
think
supply
it's
side,
affecting
right?
much.
It's going to drop issuance down drastically. It's like a supply shock.
Yeah,
I don't know if that's going to have any immediate impact.
Yeah, and I'm not sure that ETH supply crunch alone is enough to pull us, out of a bear market. There's still just necessary conditions from a macro perspective that I think need to be cleared out before we can even consider a true bull market. And then it's okay, well now, what are these crypto specific things that will trigger the next bull market? Whether it's
I think Brian,
financing new tech.
You hit the nail right on the head with your comments. It's exactly what I was going to say. It's all macros and incentives, right? And so macros are Feds. If they can get inflation under control, and then eventually they can start easing these hikes, maybe even reversing some of these hikes. Some of the leading indicators are going to be the stock market is improving, right? People have more money, and they start looking for growth opportunities. That's going to be your number one indicator over anything else. I mean, the other ones are obviously going to be is this war going to end? If the war in Russia ends, that's going to ease a lot of things, right? Like supply chain issues, military spending, all of that stuff is going to kind of cool off, and is going to help basically the whole world and the world's economy. So that's another big macro to look for. And then I think finally, towards the end of this bear market, I'm strongly in the camp of builders are going to build, and so there's going to be a lot of activity in building products in the crypto space. We're also going to see a lot more consumer-friendly crypto products. I don't know if you guys have ever tried using a ledger. Hopefully both of you guys use Ledger to interact with MetaMask and stuff, but to your typical consumer, that's a horrible experience. I love the company, I love Ledger, you guys are killing it, but that's not an appropriate experience to onboard, tens of millions or hundreds of millions of people into crypto. And we're going to start to see that towards the end of the bear market as well. And that's certainly going to help as soon as the macros kind of clear up.
What do you think that better experience is?
Dude, if I knew what that better experience was, I'd be building it right now and trying to get become a billionaire for sure. But it certainly can't be something where you punch in a pin to a physical device. Maybe it can. I don't want to say it can't, but it doesn't seem like it's going to be punching pins into physical devices, being connected to your browser. Come on, that doesn't feel right. It's it's the same feeling I get when I write Solidity code, where I have to manage my memory to optimize the transaction fees. It feels wrong. It's not right? It shouldn't be like that, and it won't. I kind of see more mobile experiences. I see more biometric auth for signing transactions, and I definitely see another world where there's some way to self-custody without, having a crypto steal and a ledger and punching in a pin through MetaMask every time you want to do a transaction, right? There's somebody's gonna figure something out, and if you guys can figure it out, let me know. I'll build it instantly, and we'll all become billionaires.
So I agree with both of you that the Fed's actions are going to largely drive this bear market, or at least keep it from, doing whatever it would, right? But one thing, this is just I'm just thinking about the coincidence, because remember last cycle, everyone was debating whether the Bitcoin halving would have an impact, and then afterwards, it's like, okay, maybe it did have an impact, but people were like, you can't really like lose that way. You're like, okay, when is it supposed to have the impact? Given where we are now, and the next halving being in April 2024, it may just so happen that a coincidence happens again, and that like inflation, whatever, that resolves itself in like a year maybe, and then we start getting into anticipation of the next halving, and then like building up that accumulation so that at just the right time it starts to like take off again. You know, that would be quite the coincidence, but given the timing, it's possible right now, right?
I could see it.
I mean, to be just I mean, to be clear, when the last halving happened, people are also getting like $1,000 checks sent to their house. Just be like, just you know. So there's like the stimmies were running wild at that time, and like I don't know. It'll be interesting. I definitely think whatever this bear market turns into is going to be wholly bullish for crypto generally. I think specifically, I think it will definitely be bullish for Bitcoin. Some of these other things, I mean, we didn't really talk too much about this. I do think there's like serious product market fit with a lot of like DeFi stuff. And you know, these things are, you always learn once the bear market comes around. It's like, you know, your interest wasn't real interest. You know, people were just there for the quick buck, basically. So I just think there's still some things we have to figure out as an industry, from like, you know, how do we make DeFi products that people actually want to use? Some of it is like UX thing. Some of it is also, you know, more technical, you know, in terms of like on-chain identity, things like that. But I will say, I think over the long term, you know, those things will get worked out. But I definitely feel very strongly coming out of this recession. Well, I'm already calling it a recession. It's not yet. You can guess I may expect it to go that way. But I do think, like, coming out of this bear market, there'll be a lot more interest in investing in assets that have, you know, kind of like provably limited supply, or easily portable, things like that. I do think, like, especially if we end up in some sort of like stagflationary environment, I think Bitcoin is pretty ideally built for something like that. But then we'll have to see kind of how a lot of these other things shake out. Like, I'm definitely accumulating ETH. I think that's going to be a very, you know, over the long term, whatever is going to get built is primarily going to be built on ETH. I think, at least for, you know, next 10 years, right? I'm not sure there's any like immediately apparent challenger that could take its throne. But yeah, I mean, I think there's still a lot of stuff we have to kind of figure out as an industry and from a product market fit perspective. The only thing that in my mind has like clear product market fit is Bitcoin. Stuff
right.
Like ETH, it's like there. It's like clearly people want to be able to use this for something. I think we're still trying to figure out the exact like thing that gets that to the masses, that like everybody's on it, that sort of thing.
And a lot of it's also regulatory, because things like, you know, tokenized stocks, for example, you know, if we could figure that out in like a truly like regulated, official fashion, I mean, that's really going to change the game. I think a lot of consumers don't really understand, you know, the power of margin, of borrowing against collateral. Like, that's kind of been reserved for relatively high net worth individuals. And like stuff like that, you know, can really, I used crypto loans myself personally. I'm not even kidding, for real stuff like buying a car. And like stuff like that, you know, if that can get unlocked to consumers, that's going to be, I mean, that's a killer product right there, right? Like, I already think it's a killer product, but it's just access, you know?
No, I agree. Actually, that's like the one thing I'm very, like, it's basically lending protocols and DEXs are like the two things. Like, all right, y'all are good, especially once lending protocols are able to take real world assets. But it's a lot of this other stuff. You know, I mean, people are always going to want to speculate, so I would say, you know, derivative exchanges too. Yeah. But it's like, okay, you know, well, what are some of these other areas? These other areas that have been explored in this bull cycle specifically. You know, how, especially a lot of stuff around, you know, so many things are just built around yield aggregation, yield. You know, how much does that type of thing survive? It's a little less clear to me.
Right.
But
so
I think
we are
onboarding real world assets would be huge.
We're over, aren't we?
Yeah, I was going to say we're nearing the top
no.
of the hour. I want to end with just one really fast, fun prediction, if y'all are okay. Just to get on the record, what do y'all think is the lowest price for Bitcoin this bear market cycle? Let's all just put out numbers, see who gets closest. For me, I'm going to say 12K. That's my guess.
9K.
What if the lows are already in? Just kidding.
That can be your
I don't
guess.
think the lows are-
You can say that.
That's not my guess.
Okay, what's your guess?
What did you say, Kevin?
I said 12K.
12? That's kind of what I was looking at too. I'm looking at the chart right now.
Carlos said
even 12
9K.
seems super
I
low.
said 9K. I'm going sub 10K for sure.
Really? Huh.
Yeah.
It
It's just
definitely
gonna, I
seems
think
like
it's going to
there
break
could
that
be-
support.
It definitely seems, I remember when we just like ranged in 10K for the longest time. Like
I remember
right
that,
leading
yeah.
up to, it's probably
we go
it's probably
up
gonna
and
come
then down and
Yeah.
up and...
Yeah. It physically pains me to say 10K, but that's...
Okay.
All right,
All right,
say
guys.
10K, but
I'll see you all
I
next
think-
time.
We'll see. 9 to 12.
All right. Good session, guys. Good seeing y'all.
All right,
Cool.
bye-bye.
See you guys.